Okay, so the last video, sorry about that, didn't have any sound. So I'm going to do another one, a new one here. And just checking out this 200 MA here, just nothing to do with anything. So on the monthly, we can see what's going on here. There's this the price action is currently at the weekly standard deviation. This range goes back to 1999, I think. Okay, that's for the monthly. Yeah, that's for the monthly. Yeah, so the weekly is, I don't think it is. No, yeah, it is. Yeah, weekly's going back to about 99. So the monthly standard deviation, though, has not been touched since 2017, about 2017 at this point right here. And yeah, about 2018. And it looks like it attempted to touch it again on 2020, about 2020, 2021, but didn't reach it. It looks like it's attempting to reach it again, but we do know that the overall direction, as you can see here, is trending up towards favoring the euro currency, which kind of sounds like the U.S. dollar economy currently. U.S. dollar is facing a lot of problems. There's another government shutdown, which is like 2 in a row, and just for the start of the year, and so I don't think it's Trump's talking about devaluing the currency, that it's a good thing to devalue the currency. So I think it's on the trend is on the incline here as far as this scale, and perhaps it is on this incline, about just starting that, maybe a fifth or into it, or a sixth into it. Anyway, it's at the, we can only deal with what we have right now. So we've got the price is at the weekly trend. If we go into the weekly, you can see that here we've got this spike up, but then it went back into the weekly deviation. All the deviations are showing inclines except the daily deviation, which starts at 2020. So for the last 5 years, we do have this downtrend, deviation to the down slope. So the question is, all the other lower time frames though are showing increases. This could change very fast. Yeah, so the question is, also that weekly standard deviation could have been used for support, but is not being used for support. So currently I'm seeing if it is being tested as resistance. So given that this is could be tested as resistance, so I'll make a stop here and target the next deviations, standard deviations time frames under it, which is these, the H1 and the M15. M15 standard deviation starts at January 2, and the H1 standard deviation starting at 25 October 25. Under that, we have the M30 standard deviation, this is a minor one because it's halfway between M15 and H1, and usually the steps up or down are in multipliers of 4. So M30 is only a multiplier of 2. So I don't really consider this. I'm not really going to look at that for price structure. Don't really consider that part of the price structure. So to target. So I'm going to target this one right here. You can see there's an intersection right here. So that looks like a nice attraction for the price. That would be February 5. So in about 4 days, that would be Thursday. Looking for the price to intersect these two standard deviations. That should be a very strong attraction for the price if this continues to act as a resistance, continues to be a resistance. If it doesn't, if price reverses and it becomes support, like I said, usually these things don't turn many times. It probably, as far as a bigger time frame, if there are bigger time frames, deep standard deviations, then or a bigger time frame means, then they'll turn less on that point. So this being a weekly, it's pretty major that it crossed it and it's using it as resistance right now. So if it crosses again, I would expect that it would keep that as a support. So that was one decision to inverse that and use it as resistance. So if it inverses again, that would be, I wouldn't expect it doing it more than that. But usually I would not see it. If it had to turn a couple of times, I don't see it. Usually I don't see it turn more than, change directions more than 2 times. Okay, so the direction you have, usually you have your current direction, and then it will change direction, then it will change direction again. So that's a total of 3 directions. If it does change direction and uses this as support, then we're going to target this, and that would be a total of 100, looks like 186 pips. So another couple of problems I wanted to talk about here is the different time frames, like the H1 and the H4 don't have the same amount of historical data. So sometimes they don't show these standard deviation lines. And so, for example, you can see that on here we can see the weekly, but on the H1 you can't see the weekly. It's gone because the data is not, H1 has insufficient data. It doesn't have data to show that. Also, you've got some other problems like this H1. This is a 1-day trend, standard deviation trend. You can see that it's intersecting here on the 28th, 29th. But if you go to the H4, you'll see that they're parallel. Okay, so there's a little difference because of the data ranges that each of these time frames have access to. But after you get a feel for it, generally, it depends on what platform you use. Your chart may not have that problem. So it's totally dependent on the time ranges and the platform, what the platform is doing with the time ranges. But after you get a feel for that, you can just continue to see the big picture remains the same, and what other next, has much changed since you, since the last time that you set these time ranges. So, for example, when was this? If we go to the H1, you can see that these time ranges were probably set here on the last time they were set was on the 30th, right, or the 29th to the 30th. You can see all of them in here. So the time that I put these on, was the 26th, right, January 26th. So but I'm still trying to use them to trade, right? Trade the price structure. So the 26th was Monday, so that was about 6 days ago. And I took some trades on that price structure and I made some money. I hit some targets, and I have not changed the price structure since, and I'm still using it to react with the price structure, the current price structure. Right, so we've got all this price structure here, and I used that to hit this target, I believe, up here. I could have used it to hit this target, and now I'm using it to hit this target. Okay, so that's if you're. So I've showed that in past videos, where I'll carry the price structure for a month or 2 months until it looks like the price structure is not fitting the past analysis that I did, the past structures that I made, the past deviations. So it doesn't look like it's fitting it, then you can recreate them, redraw them. But currently, so what I could have done was get into here. I could have sold at this point up here using this as the stop, and then attempting to hit this, but I didn't decide to get in until right now. So there's about a 24-hour lag, 24 to 48-hour lag on me deciding to enter. Because of that, I did not get about 100 pips. So if I got in here and used this as the stop, that would be 60 pips, and this would have been 180. So that would have been 1 to 3 risk reward. The reason why I choose this as a stop, obviously it's obvious why this is the target. I chose that as the target. But the reason I choose that as a stop is because that is the weekly median mean value. So I've just put the stop right above it, right above the weekly mean value. It's not obvious from the price structure, but that's what the point, I think, of a strategy is, that you know when your strategy is working, you know that you've identified an underlying structure in the market that's true. If your strategy is not working, then you are not using underlying structures, true underlying structures of the market. So these are standard deviation time ranges, multi time ranges. So that's it. This I have sound here, so I'll just check this tomorrow.